So the market's gapping to around the 290 level, the SPYs in the pre-market. There were a few tests at the 287 area, a strong move on Tuesday through the top of the kind of the multi-day range here. We did a retest intraday, closed above it, and now we are heading back towards the all-time high. So since the beginning of May, burden has been on the sellers in the market. It's been low volatility and minor pullbacks since we made this higher low here. It's actually gotten really tight the last, let's see, in early July. You can kind of see the compression of volatility in here, how this, even as we were moving higher from early May, there was some more movement now intraday. It's just getting tighter and tighter. Buyers in control. So for today, it looks like this 289.50. We sold off hard from last week. Top of the move here. Had a little bit of trouble at the end of the day here. And this will look for the stack to support and target up here. $291 to 291.5 is kind of the top area from
Augie Institute next step.
August 29th, August 30th. IWM has been real tight. So the last few days it's been failing. It's been spiking above 171.30. Last 2 out of the last 3 days it got up to about 57, 58 cents. Again, we've talked about this a bunch of times, but it's just very straight up and down intraday. My belief is this is a result of it doesn't have enough liquidity to handle what some of the larger funds are doing in terms of moving, trying to play the market through this ETF the way they do in the SPYs. And so you just see these big up and down bars when the programs come in. If we'd ever see some sort of tight consolidation above this 171.30 area and a break to the upside, I would certainly look to play that. And of course, a failure again up here at 171.5. When it gets that back down below 171.30, you can play it on the short side again. It's failed there a bunch of times. 1, 2, 3, 3 of the last 4 days. All right, so there's actually a bunch of things in play today. KR seems to be something we look at every time it reports. It moves a lot more than you would expect, or I would expect from a market-leading retail grocer. Here's the daily. There's a sell imbalance. Early reports are in sell imbalance coming for the open. So it had this monster move a couple of years ago where it had explosive growth and had this huge uptrend, $40. This was the crash. Yeah, this was the mini crash, I think the summer of 2000. No, it wasn't. Yeah, it was. The mini crash in August of 2015 made a new high. And then since then, had this pretty hard downtrend from 2016 to late 2017. It's been trying to move outside of this and climb its way back up. I think this gap down here was Amazon potentially going to compete with them. So I think today has moved down, and the pre-market is more a function of it had run up pretty good since last quarter. It gapped above $28 on last quarter's earnings, retest a few days, and then they ran it up, took out this pivot high from the beginning of the year. So I think it's more a reaction of the numbers were fine, everything's okay, but you had a big move up from 24 to 32 over since the spring. And so I would expect it to support in this area here. And so it's already touched this in the pre-market. This, I think, gives us our best picture. So this is, did I put that on the sheet? 2860 I put on. It's around 2850, 2860. And then below that, you have 28. If it revisits, I would expect it to bounce from this area right here. It's a lot of accumulation into 27. I put 28 on the sheet as a support, but it looks like it was just below there was being accumulated, 2790-ish, 2785, close enough. And when it moved off that low, had an explosive move up to 2970, it came down, did a retest, made a higher low here at 2860. That's how I got that level. For those of you curious how sometimes I develop some of these levels that aren't as obvious. And so this was the beginning of kind of, it supported here, it came back down, supported for a bunch of days, moved off of that, came in, here was the higher low, and that began to move up to the low 30s. And any type of flush into this area this morning should be viable. I put 30 as inflection, but and this technically, if it opens down here, this 2980 to 30 will be resistance. And if it opens right around here, we'll watch to see if it moves above. The first move is down. It's here. Watch to see if it fails here. So most likely the trade that I would make is a buy into this flush area where it already moved off of. 70,000 sell imbalance for the open. It's went up from 60. It'll probably trade 20 million plus shares today. So just zooming in on the pre-market action, initial move down. It's definitely holding below 30. Spiked up here at 8 o'clock. Low is 28.30. Starting to look like 29 is going to become important on the open. We have to put in the low now. They're starting to, the buyer stepped up here. Actually, should probably have. I'm going to actually delete 30 as an inflection. Just put that as the first resistance. Okay. ACOR. So this was selling off coming into this news. The FDA wants more time now to review their application for this Parkinson's drug based on a bunch of new information they submitted or how they submitted the data. So it came on our radar the other day when it started to sell off from the high 20s. Then there was follow through the next 2 days, and now it's those people ended up being right. You would think now that the news is out, it would have some sort of bounce. So here's the 4-hour chart of it. It's actually pretty wild, these moves. See, last time it came down here, this was back in March 2017. We did have follow through after this big down for a couple of months before turning around. Retested here at 1650. We're opening below 1650. Here was the low, and I have 15 as the support here. Unfortunately, it only has 60,000 shares in the pre-market. Normally trades 660. Actually says on my platform the average volume for this stock is 666,000. So that in itself should probably keep us from trading it. Maybe it's just indicative of the way that it moves. The satanic number, it's just insane, these moves. Possessed. So I guess what I would look for right at first move is any type of bidding here. Again, remember, it started from the high 20s a few days ago. So I would be pretty aggressive buying it in front of 15. Our firm isn't net shorted for some reason. We're always net short everything that gaps down. I'm not sure what's going on there. It will make it more difficult for me to trade on the long side if we do get net short. And then what I'd want to see is the 1650, which I have as S1, support 1 on the sheet, doesn't necessarily have to like go straight through it immediately, but I'd want to see it kind of holding up in this area here around it, and then a break to the upside. And I'd play it for move all the way to, I have 1750 there, but I'd play it for a move to, it's down so much. So 18 to 19, again, just based on the fact that they already started selling it from the high 20s coming into the news a few days ago. And then PVTL, which at first glance, if you just look at the numbers in the guidance, it didn't seem that bad. But I guess it's an IPO. It's cloud-based. I guess when something's cloud-based, the expectation is it will constantly beat and raise revenue guidance a lot. And I guess that's why it gapped up here on this quarter's last June. Actually, no, that's this year. That's last quarter's earnings. So it IPO'd at 15 in April. And then when IPO started to get hot, it went vertical. And it's gapping down to here. So I could go either way on this one. It did get some downgrades. It is gapping below this 2250, which is not great. The bid's 2160 right now, which is this low right here. I suppose if it held right here and got above 22, I would look for some sort of bounce into this right here. So the second down leg took it from 24.5 to here, 2080. So let's start with this range. Let's start with this 22.5 by 2085. You certainly have been buying into there. This volume is pretty heavy. It's actually done half of its daily volume in the pre-market. So this is much better from an informational perspective than ACOR. They're buying it here. Maybe it has a bounce back up into here, but I would be playing it at least for a move for this range. And then we'll kind of see how it closes. Okay, second base technicals, IQ. I didn't talk about this yesterday, but I had noticed they were starting to buy it above where we bought it last month at 25. They were buying it at 26 this time. So remember, I bought it the day it bottomed here at 25. Actually got the bottom. Came back down, did a retest of 25. I don't remember where I sold it. Maybe I sold it into 28, into here or something, or here. I did keep on running up while I was on vacation. And then they started accumulating it a little bit higher than last time. And this is with China falling apart, which is kind of interesting. I should have been long this and talked about it yesterday to you guys. And so then the logical thing now would be, does it actually, if it pulls back this morning, does it hold here at 28? And if it does, you know, higher, 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 maybe it does, we get a retest of this 32 again. Do we have that on there? Yeah, we have 30 on the sheet, 33. So definitely looking to play this on the long side. Hopefully they squish it down right on the open, something like this. If they don't do that, then you're going to have to see some sort of consolidation, I would say above 29.50, where it broke out from on the 27th. The next one is BHC, which was our #1 idea yesterday. It was pretty easy long setup. So right on the open, it dipped into pre-market support and then went straight up to pretty much our resistance area and failed. So the rest of the day didn't do much. It was accumulated in the 2330s, but it didn't close, kind of at the top of the range. Certainly closed above the top half of the range. So I guess the way I would look at it today is if it continues to be bought here in this area right here, and then starts to hold above 2380, it's got a shot at breaking from that 24. 24 is a tough level for the stock, obviously. And finally, MU. So MU got the downgrade from Goldman yesterday. It's a reasonably good chance that's the short-term bottom in the stock. I've talked about this before in the morning meeting, the battle that's going on between the bulls and the bears in this sector. Clearly, the bears have won. It's come from 64 down to the low 40s. But for it to go all the way to the 30s, I would think that there's going to have to be some bad numbers and guidance. Because so far it's been all about good numbers and good guidance the last couple of quarters. So we should see a bounce. Let's just take a look at the last. This was the double top into the two really good quarters they reported. It's come back down. I guess there technically was a little bit more downside if you look at this chart. So 439.40 is kind of where people probably were watching. What does a reasonable bounce look like now? 45 to 48 probably, somewhere in this band. Notice on the way down, it keeps on having pretty nice bounces. So this downtrend's got to kind of catch up to it. So yesterday it gapped down on the downgrade. It popped back up to the pre-market resistance. It then got hammered. I did see it down here at 40.60, but I didn't buy it. And then didn't quite get to 42, where it had failed in the morning and the afternoon. And now it's gapping above. So I think the way people are going to be looking at this for a bounce is 41.75 to 42. And if it supports here, if for today, they'd probably play it for move into here. And you kind of see. But I've seen a lot of good bounces in this one over the last 6-8 months. Every time I think it's hammered. And that's it. And obviously, I'm actually working on a video on TLRY that probably would be posted this afternoon. It's about shorting hot IPOs that don't have much supply, compared to some past ones. The bigger picture takeaway is this one to come back down to where it started from into this area here might take quite some time. It could take 6 months. But along the way, we'll probably have a 15-20% down move from wherever it tops out. So, let's say for argument's sake, the top is today is like here. A 20% down move from there will just be it going back down to here. Like this range, which would actually coincide with the uptrend. So along the way, there's going to be definitely some money onto these pullbacks to the trend, but the topping action could take a while for the real top to be in and for it to kind of get cut in half, come back down to, let's say, this area here, somewhere between here and here. And we'll get back down here eventually, I would think.